Right now, we're officially now live. There's another person waiting to get on. Looks like I have you participating to get on. All right, so let's go ahead and get started. So we're gonna piggyback on the last couple of trainings that we've had. We had one that you guys missed. We did it on Tuesday last week. Some of you that are coming on might have seen this before if you're part of the Los Angeles group or like Bakersfield, Kern County area. I'm going to be diving into really some meat and potato, nut and bolt type of training. I hope that that you guys could keep up. I don't think none of it's going to be rocket science or too much to go over your head. But before we even get into that nut and bolt type of a training that I want to dive into, because I think it's very important that you guys understand the details of what you bring to the marketplace and how you could really help families. Because more importantly, above everything, we want you to be confident. We want you to know that you have a solid team behind you that can support you. You don't have to have all the answers, but that we really have this dialed into a science, and everybody that we're serving, it's all tailor made to fit their particular situation. And once you really start sitting with more and more folks, you're going to start to realize that 1 year, 2 years, 3 years can make a real big difference as to who we're going to go with and why a certain strategy, why we're going to use, when do we use a bonus strategy, when do we not use a bonus strategy, does it even make sense, what are you giving up when you're getting a bonus strategy. So we're going to really cover those specifics so that you could feel confident that we are doing the best thing for everybody that we're sitting with. But before that, we're going to go ahead and kickstart really setting the foundation, making sure that your wires up here are on the right place and that you're fully ready for this time right now. I don't think you could ever get enough of the nutrients, the right type of positive nutrients, and there couldn't be a better person to really set the tone. None other than one of our fearless leaders. He's one of the pillars of the company. He's someone that I believe that, I mean, I don't even know where in the world. I'm going to go ahead and mute everybody. I'm going to approve a few more people.
Oh.
How do I mute all?
Okay, let me
mute
call
all.
you back.
Here
Okay.
it is. Mute everybody. Okay. Here it is. I just muted everybody. Okay. So there couldn't be a better person to set the tone for what we're going to dive into, especially during this time right now. And you could have total confidence that this particular person, even for those of you that work with them locally, that he truly has your back completely. He's got a tremendous heart. He will go above and beyond for everybody. He's a servant leader. He's right now killing it. And right now he's really the person that is setting the pace with doing business online. He's been doing it for a while, but now it's just really ramped up. In fact, he's one of the reasons why we've done business in so many different states across the US, and he's continually doing that now. So it's kind of cool. Sometimes I get a phone call, hey, is the company yet approved in this state? Because I'm about to write business. So constantly I get those calls from this individual. So definitely an amazing example of being able to do business with no matter where. It doesn't matter where you're at, what time of day, whether there's miles and miles in between. He definitely will get in front of people and make it happen and protect people's lives and help people to protect their assets. So without further ado, I'm going to pass over the torch here to our fearless leader, Mr. Carlo Salgado. I'm going to go ahead and mute myself, but I want to first check to see if we could hear you.
Yeah, can you hear me, man? Am I good?
Loud and clear, loud and clear.
Awesome, man. What's going on, everybody? Good evening. It's good to see you. I love it when you guys check yourself off camera. I know some of you guys are, maybe busy, but I encourage you to show your face so that we can see everybody. I don't care if you're in pajamas. I don't care if you're not wearing no makeup, right? You guys all look good to me, man. That's what I'm talking. There you go, Caro. Fabi, what's up, Fabi? Is that Estela there with Lola? Yes, welcome. Good. Okay, good. So, yes, welcome, Estela. I heard Estela text me. She's going to be our new associate coming on board out of Yuma, Arizona. So shout out to Lola out there helping people and providing opportunity. What's up, Natalie? So good to see everybody. So what I want to do is just really kick this off for the few minutes I have. And what an incredible time to be alive, is it not? I think we could all agree that never have we anticipated something like this really affecting us on let alone on a national level, a global level. And it's affecting everybody, you know, and, you know, I pray and hope that all of you guys, your families are going to be, you know, good to go, and that your families are taken care of and you have enough, enough to sustain you, you know. And hold on, make sure we mute everybody there. Muting myself. Okay, can you guys hear me? So just, I think we've been preaching emotional intelligence and personal development from the jump. I mean, ever since that you first signed that AMA, we said, read this book, read that book. And whether you did that or not, I think it's entirely up to you. But right now is, if you're someone that focuses on personal development, or you're a person of faith, or you're very grounded spiritually, I mean, this is the time for leaders to rise, guys, right? This is why we do the work. Your time is being called. You know, there are people, you know, depending on how you're dealing with this emotionally, I'm sure I've already heard stories from some of you. I think, you know, nod your head if you're dealing with people who are going through a state of panic right now. Anybody know someone like that, whether it's in your family, right? You know, clients, people are in a state of panic. You know, we are dealing with a time of uncertainty, and fortunately for us, this is why we do the training, right? The same. I think Linda's having some tech. If you can mute Linda, Dago, I think she can't hear us, but she's got her mic is coming in. Okay, thank you. We're at a time right now of uncertainty, so it's our time to really step up as leaders and kind of be that voice. Be, you know, our families are watching us, your teammates are watching you, clients are watching you, and don't forget who you are. You know, don't forget where you come from. And I just really want to make sure that we're good on that. So I just have a few ideas that I want to share with you before Dago goes into some technical training. This reminds me of a training that I gave months ago on the 6 human needs from Tony Robbins. And I'm not going to have time to go through every single one of these, okay? But I was fortunate to go to a Tony Robbins event where people paid thousands of dollars, and he did an all-day training on the 6 human needs that I found just incredibly remarkable. And I'd encourage you to write these down, right? We're only going to cover one of them in its totality, but the 6 human needs for us that we need as human beings is the need for certainty. That's number one. You know, and the need for certainty is something that makes us feel safe, it's comfortable, it makes us feel secure, protected. Because when you have the need of certainty, the need for predictability is important, right? If you don't know where your next meal's coming from, if you don't know what's going to happen 2 weeks from now, and your number one need is certainty, you're going to have some issues, right? You're going to struggle emotionally. Number two is what I'm going to hit on most of tonight is, it is actually a human need, believe it or not, is uncertainty. We need it, right? So just as you need a certainty, we also have a need for uncertainty. And right now we are dealing with some very uncertain times, and people are getting that need met in ways that may not be the best for them. But it's our need to feel different. It's our need to feel challenged. It's our need to feel risk. Okay.
Lost you there.
Let's see here. It's Linda again, brother. If you could mute her. She's having technical difficulties. She keeps coming off and on. You know, it's our need for excitement. It's our need for surprise. It's our need for entertainment in our lives. And I think right now we could all say in some form or fashion, whether things are different, things are challenging, things are risky. We're dealing with some changes right now. Some could look at this as excitement. Some could look at this as a unique surprise. Some can flat out be entertained by all this. I don't know. It all depends on the emotional level where you fall under the need of uncertainty. But for me, I'll look at you guys here. I think this is a time, it's a great time to be alive. I don't know what the next 2 weeks, right? What the next 2 weeks hold for us, you know, because there's a lot of uncertainty. But I want to tell you right now is just be careful with what you're consuming right now and how much you're consuming it. you know, I'm all about being informed, you know, inform yourself to what's going on in your local area, what's going on in the news. But if you're spending most of your time looking at these news outlets and, you know, the news is selling fear like hotcakes right now, that could affect you psychologically. And it can be very distracting for the people that are counting on you right now. You know, right now, people are losing their retirement. The fact is, we don't know what will happen 2 weeks from now. We don't know how this coronavirus will affect us, right? That's the truth, okay? But I can tell you right now, what's going on right now is people are losing their retirements left and right, you know, and that's really why we have a job to do, is to go out there and provide service and to people who are taken care of, that we need to take care of. You know, because if this thing boils over, which I believe it will, the aftermath is going to be economic blow. And we have you know, right now when you're dealing with, I was talking to a client earlier today, and just hearing her tone over the phone, it was almost somewhat emotional over her husband losing. He had like 170,000 and he lost over 40,000 in the last 2 weeks. So that's their nest egg, you know, so I can hear the emotion in her voice. And, you know, it reminds me, like, I'm over here thinking I'm getting business left and right because I want to go help people. But it reminds me, like, you know what, Carlo, like, this is really important what we do. You know, yes, you're out there making money, you're helping people, you're building your business. But at the end of the day, someone's livelihood is on the line too, right? We have the medical personnel out there who are dealing with people's life and death situations as this comes out, but we're dealing with life and death situations in terms of people's livelihood, in terms of their financial well-being. And it's important that when you're dealing with these people, that you also have a level of calm, you have a level of emotional intelligence, that you say, hey, I understand what you're going through. You know, I'm here for you and I'm going to help you. You know, people need to hear that right now. They need to feel it, because that's where people are at. And there's some social unrest, you know, and a big part of it right now is economics. Economics is really critical right now. So dealing with uncertainty is what we're dealing with. Your level of uncertainty will determine the quality of your life, of how much uncertainty you can handle, you know. And so that's an emotional muscle that some of you have maybe more built than others. This is the time to build it, and we're building it no matter what. Okay, so it's funny, man. I'm running through people. Some people are very naive, like, I don't care, I'm gonna keep doing what I'm doing. Some people are like, hey, I want to be informed, you know, but I want to think critically. I want to make calculated and critical decisions. I don't want to just jump to the first news headline and start reacting emotionally. Be conscious of that. Okay, that's all I'm saying. All right. So, in going back to this, so that's need number 2. Need number 3 is the need to feel significant. You know, if you meet your need for significance by giving more than anyone else, or by finding your uniqueness by making a difference in the world, there is no downside to that, only upside. But there can be downsides to getting significance as well. Okay. You know, if people do it through violence, that's why violence is so powerful in the world, because, you know, if you have a gun and I have what you need and I disrespect you, you can pull that gun on me and right away you're going to be significant. You know, you now have a form of power. So people sometimes find less than reputable ways for significance. The positive way that we find significance is how we're going out there and giving to people right now, right? Helping people, being a resource, being a light. Number 4, love and connection. You know, what's unique about number 4 is Saturday night, my wife and I are typically, we have date night, you know, we'll pull some wine or charcuterie boards and we just have conversations. We catch up, because that's when I do that. This Saturday's conversation was very interesting, because we were actually talking about what happens if I die. What are we going to do if this happens, you know? And how many of you have been having some really unique conversations because of this whole thing, you know, with people that you love? Like, what do we do, you know? And it causes a level of uncertainty for people, and it's conversations that we need to have. But what I see the positive side to it is like, wow, you know, like the fact that we're having these conversations are important. You know, and these are conversations that are happening all across the board. If anything, it's a wake-up call for humanity, right? To really start looking at things that they've been overlooking. Whatever we've been taking for granted, we're going to stop taking for granted, right? We're going to start looking at ways, you know, so love and connection is important, you know, to be there for the people we love, you know, make sure that you're checking in on your people, not just your teammates, but obviously your family. You know, who's got older parents in here? I think a lot of us got older parents, man. Make sure you're checking on your older parents, especially if they're alone. You know, they may need to be, hey, are you good, mom? Are you good, dad? How you doing? And that's important right now. Number 5 is growth. We need it, okay? And we need growth. It is a human need. If you're not growing, you're dying. And I would encourage you to make sure that you're consuming things that are positive, consuming things that are giving you a level of certainty, right? That making you feel more secure. Keep on growing, keep on working on yourself. And number 6 is contribution. We need to feel that we're giving back. They need to feel like we're giving, donating, leaving our mark in the world, serving, offering, and contributing to others. You know, this is the time that the human needs are super important, you know, and you see it. I mean, I see the headlines, you know, there's like 4,000 nurses and doctors are coming out of retirement right now. Why? Because I want to help. You know, the National Guard is being called up. I have a few buddies in National Guard and they're being activated right now, right? So there's a lot of unique things happening, but people are answering the call because what's important to people is contribution. I want to feel like I'm making a difference, you know? So these are all different, you know, where you range on this, everyone's, you know, so for example, if your need for certainty dominates every other need, you know, then that could be a struggle right now, right? You know, if you're like, man, I need certainty more than anything in my life, that could be, you can be going through a very tough emotional time right now because we're dealing with a lot of uncertainty on many levels. You know, people are losing their job, people are losing their retirement. And so this is something that you're going to have to like deal with. Okay. If uncertainty is one of your biggest needs, which a lot of times entrepreneurs, this is why you like, because you like to play the game, you like risk. Some of you may be at a point where you feel more alive than you ever have, right? You feel excited. I, to some degree, feel that way, right? I feel like, okay, this is, I want to live. I want to max it out. I want to be a light in a dark room right now for people. Okay, significance. If that's your need, right? You want to make, hey, you want everyone to know that you're here to help. You know, love and connection. If that's your dominant need, you want to make sure that everyone that you love knows that you're there. Okay, we talked about growth, and then we talked about contribution. So I'm all about right now contributing. I want to help as many people as I possible while still being there for my family. I'm on quarantine. You know, my wife, I'm here with my wife and kids in our home. Fortunately, we have a backyard and we have some space. You know, I was talking with Isaac. You know, Isaac's on the 15th floor in downtown San Diego. So I'm just calling him every 2 hours to make sure that he doesn't jump off that 15th floor because he's locked in that place, right? But you know, he's doing good, guys. You know, so people are out there, we're making things happen. We're still helping people. You know, but don't forget that we're leaders. Don't forget that society needs us. You know, and I'll end with this: is fortunately for us, fortunately, this is probably one of the greatest blessings for us right now, is that what we do is incredibly recession proof. People need us more than you need that paycheck right now, right? Whatever you're going to make on that rollover you're doing, and as happy as that's going, as cool as you think that is, trust me, you protecting that person's retirement account from being, you know, disseminated is way more important than what you're going to earn. So don't lose sight of that, you know. And before I introduce Doggo, just know that people need us more than you need them to make a sale right now. We're dealing with some really important issues when it comes to people's lives in terms of protecting their money and protecting their families. So don't, you know, and I say that to encourage those of you that are still maybe afraid to talk to people. And that's a fear that I'm going to ask you and push you to get over it quickly, because your fear of calling that person, what you don't realize is that person is going through a really troubled time right now. And if they knew that you could help them protect their retirement, their legacy, trust me, right? You don't want to be that person that says, you know, I wanted to call you when we're going through this whole coronavirus scare. Like, why didn't you? If I would have known that you could do that for me, I would have needed that help. So this is not the time, right? This is the time to power through your discomfort for the sake of other people. I'd rather someone tell me, no, I'm not interested, than say, man, I should have asked them, you know, and they lost everything. Don't be that person, okay? I'll turn it back over to Dago, you know, and I for those of you that were on the Saturday's call, you know, it's something I didn't tell Dago earlier. Saturday's training that Dago did was, I've seen this guy train, I don't know how many times. I mean, like literally hundreds of times over the last 20 years. And this training that he did last Saturday was one of his best trainings that I felt that he did, that I personally got a lot of value from as someone that's been, you know, mentored underneath him. And what he's about to share with you, I think he's got a ton of knowledge on. You know, I learned the rollover game from him. I really did. Everything about rollovers, I learned from him. He pointed me to the resources. He showed me the game. And he put me in a position where I was afraid of this. I didn't know anything of this, where because of his coaching, I mean, I was able to go out there and turn this little operation of doing this part-time into a full-time gig, making, you know, close to multiple six figures based on this education. And crisis does lead to opportunity. It is opportunity, you know, and right now, this is the time. The rollover game is alive and well right now. And people need us big time, you know. So you're learning from someone that has rolled over millions upon millions of dollars and has done very well for himself personally, financially, you know. And so I trust his knowledge. I trust his delivery and the way that he shares this information. And I know there's some new people. I think Estella is probably the newest person who this is her first call, you know, so you'll kind of get baptized by fire a little bit into what's going on. But this is for everybody. You know, take this stuff seriously, you know, and I know I'm preaching to the choir because you guys are here, but really listen, okay? Don't have any back things website. Don't be Facebooking right now. Don't be texting back and forth. Take this time to say, I need to know this so that I can take action on it, because there are families right now that are dependent on this information that I'm about to get. Take it seriously. So Dago, brother, thank you for being on the call, man. I had asked you to come on and share some insight. And I'll go ahead and turn it over to you, man. Thank you for all you do.
Appreciate it. Can you hear me?
Loud and clear.
Awesome. If you can mute yourself. Thank you for setting the stage and for really setting the foundation. I think it's very important that we all check our mindset. And in Think and Grow Rich, it says you got to seal your mind airtight from all negativity. Even just being around it, I don't know. There's a reason why there's something that in science that they call osmosis. I think that if you're around too much negativity, if you're in an environment, you're watching too much news, it's just going to sink. Naturally, it's going to sink in. So you got to be very careful of that and protect your mind with everything you can. And so I'm going to go ahead and dive in and really get into nut and bolts. I'm going to go into presentation mode. So as I go through this presentation, I believe that there's a lot you could take from it, but it's really what a lot of the state of the economy where it's at right now. I think there's a huge need with what I'm going to cover with. You might have seen some of this information, but I hope that you really pay close attention and you listen like you've never listened before, because I think that you could, here's the type of student that I am. So I hope that I can impress this upon you guys, is that even if you've heard information for the 100th time or 200th time, look for those little gaps in between, those little nuggets that you need. So you take notes, because it's those transitions, there's those little pieces of information that are going to be the difference makers in your business. That's the way it's always worked. And I think that's the way it's always going to be. You can never know enough. And if you think you know it all, that's when you're done. So empty out your cup, be ready to really listen in as I get into this. So let me go ahead and share my screen. Let's see, which one is it? It's right here. I'm going to go into presentation mode. So tonight I want to discuss with you guys the power of indexed annuities. Why in the world am I going to talk about this? Carlo just mentioned it. There are so many people right now that are going through this uncertain time where they're scared. They're scared that they're going to lose money. They're scared that another 2008 is going to happen, not to mention another 2000 to 2003. They're just scared to lose money. They've worked so hard to get to this point, and there's not going to be, there's no one out there that's going to give you a special, stock tip or nothing like that. That doesn't exist. Most people are passive investors, and what that means is that they're just riding the roller coaster, crossing their fingers, hoping that the market will be on an upswing or on the upside when they go to retire. But not to mention the other phase of their life, which is the phase where they're starting to withdraw money. And that's the phase where a lot of people right now are in, where they're retired. How about those folks? How about folks that are losing half their incomes or losing a major chunk of their retirement? So this is why I want to jump into this topic. So as I go through this, most people, they don't have a clear plan whatsoever. The things that I'm going to cover right now are things that we've been talking about for years. And it's just now that all of a sudden this pandemic that's happening right now has caught people's attention, because you have to. Because look at what's going on around the world. It's like you're forced to stop and to really start to look at your life objectively, your finances, the people you love, etc. And then you're starting to look at your retirement. You're thinking, oh my gosh, my 401k, I don't want it to dwindle down to a 201k. And so most people don't have the time, training, or temperament to manage their own brokerage accounts to begin with. In fact, every time that we sit with folks, it seems like most of the time we're opening up the statement for them for the first time. And the reason that we're doing that, it's because they're too scared. They're intimidated. They have no idea how to read it. All they see is little parentheses around their numbers. And you know what those parentheses means. That means there's losses. That means there's also fees involved there. So most people don't have the time or training or temperament to manage their own accounts. And people are tired of losing money. Are people losing money right now? Heck yeah, they are. There's a lot of people losing money. Don't fall for the trap where someone said, hey, I just made X amount on this stock today. I made, 15,000. I'm like, wait a minute. Well, how much have you lost over the last month? And they probably are more down than they are up. So don't fall into that trap and ride on that with people when they say that they've made money today. But when you look at their overall portfolio, how is it really doing? The other thing too is that most people, again, like I mentioned, are riding that roller coaster. Have you ever noticed that when the market is up, everyone tends to be up, and when the market goes down, everyone tends to be down? Is that true or not true? Give me a thumbs up if that's true, right? Most people are like that. So it's not that it's anyone's fault. Imagine this, if you worked at a company for 20, 30 years or 10, 15 years, whatever it is, your focus is that job. Your focus is, hey, I want to climb that ladder. I want to do the best that I could do to my ability. And then when you get off work, your focus is family. Your focus is relaxing for a minute, and then you're back on the grind again. So most people, again, they're riding the roller coaster. They're not taking the time to really understand. No professional money managers calling you and saying, hey, the market just went down 10% or 15%. I think that we suggest that you should move into this type of a strategy. They don't do that. Again, everyone's passively investing, and they just have those type of funds. They're not active managed portfolios. So when you open up your statement, do you think people right now are excited about that? I bet they're not. Do you think they feel optimistic? How about content, confused, frustrated, nervous, angry, fearful, out of control, or do they feel hopeless? I would probably bank to say that most people are feeling nervous, angry, frustrated. They feel out of control. Carla was just mentioning how uncertainty is a huge part in human nature, where people just want to feel secure. But right now, everything seems to be spiraling out of control, and even the government doesn't have a very clear, understanding of what is really happening right now. And so it's natural for everyone to feel this uncomfort of this uncertainty that we're in right now. So here's really one of the biggest major roadblocks when it comes to your money, and that's volatility, the ups and downs. It's the losses. So you could recoup losses, but what happens is you're losing time. I mean, the time that it takes to recoup, and I'm going to go into that, but what volatility really means, it's fear of loss. So here's the roller coaster that I'm talking about. It almost looks like a roller coaster or a market EKG, almost like a heart reading, right? If you were to look at the historicals from 1960, even I should have stretched it out even beyond 2010, this is literally the S&P 500. Can you imagine going through those roller coasters and the type of stress that you could go through over the years? Because again, there is no magic formula. The industry tells you, or the Wall Street is telling you, hey, buy they're telling you dollar cost averaging, the market always goes up. And I think that those are all myths. Once you really start to dive into the details, does the market really always go up? Can you really take a dollar cost average approach and that be the magic formula? If you read the small print, it's not the magic formula that's going to get you there. So here's some returns. So I want you guys to study this because here's where it gets a little bit more technical. And this is some history, okay? So how many of you guys, by raise a hand, remember 2000 and 2003? When the dot-com bubble burst, right? Everyone, you could have thrown a dart at anything before that and everything in tech was booming and everyone's making money and you felt like a rock star. But then all of a sudden, boom, 2000 takes place and the market starts to go down for 3 years in a row. So can you imagine the folks that were trying to retire during these years, how they felt? You know, they were pretty aggressively investing because they were hitting home runs when they were investing before that. So now there's a huge dip for 3 years straight. Right now, the market has been jumping and has been dropping and dropping. And I'll show you a graph right now of today's snapshot of the S&P 500. But who knows? What if another 3-year repeats? If you look at the Nikkei, which is the index fund in Japan, that went down for 20 years straight. I don't know. I'm not trying to be a pessimist. I'm not trying to be negative. I'm just sharing with you facts that have happened in the recent past in the US and that have happened in other markets that are pretty large economies in the world. So now let's go into 2008, right? The subprime mortgage, all that stuff boomed. A lot of people are making money in the real estate business again. And then bam, that took a huge dip. People lost overnight almost half their accounts. Imagine trying to retire at that point. Again, all I'm trying to say here is that most people are crossing their fingers. There is no magic formula. And either way, you still got to consider, even if you're in retirement phase, I saw people that were receiving out of $1 million, because back then when I was doing unit investment trust, and this is when you take people's funds and say, hey, look, you could buy this all-star portfolio of these unit investment trusts. Here's the fee for that. And here's the returns that they're giving. And this is the dividends that it's paying out. It was paying out close to 10%. So on $1 million, a retired person was getting $100,000 on $1 million. It doesn't sound too bad, right? That's a pretty awesome dividend that's being paid out. But overnight, boom, those things went down to 3 and 4%. So imagine you're used to a lifestyle of receiving $100,000 a year, and all of a sudden it drops down to $30,000. Not to mention the portfolio itself also losing its value. So those are the times that we're in then. I believe that these are the times that are happening now. So you got to really pay close attention, and you got to get out there in front of people and what we do and share with people the different solutions that are available. And I believe the index strategy is the way to secure your future with still being able to get market-like returns, but with none of the negatives, and also reducing your cost. So again, here's what's happening now. This is a snapshot today. Literally, I took it before getting on today's webinar. Last week I had it and it still looked the same. It actually looks worse now. And imagine if you circle this point right here, this is where we're at. And this is just looking back 1 year. It looked like the economy is doing good. It's doing good. And then boom, look at that huge drop off right here. Does that look like you just fell off a cliff? Right? That's a pretty substantial dip. So there's people also saying, hey, right now is a good time to buy, a good time to buy. I can't predict the future. I don't know. But all I could tell you is this, is that I would rather be in a portfolio or a type of a strategy where you could still participate and have market-like returns, but with none of the negatives. And you definitely avoid those huge losses that are happening right now. You know, I always tell my clients, hey, look, the account that I'm setting you up with in this particular strategy is going to be very, very boring. Here's what I mean by boring. You're not going to get statements every 3 months sharing, you know, looking at your accounts or where you're like, oh my gosh, I got to move it because it's losing money, or I got to make a change. You're not going to get those statements. You're never going to lose money, as a matter of fact. You're going to get one statement once a year, and it's going to show you whether you get an index crediting for that year or not. But either way, your principal is always going to be protected. And in fact, we're going to add a rider on it that's going to give you a roll-up rate that's going to guarantee a future income value. I'm going to get into those specifics right now. So let me go ahead and move forward here. So jump ahead. Here's exactly the different phases that take place. There's the income preservation, right? This is what takes place in these index annuities. You have principal protection, which the contract guarantees that the value of the account, like say for instance, you move $100,000 into this account, in contract, in black and white, it's guaranteed that you will never lose that money. I love that about this. We've moved literally millions of dollars with just that alone. People can't stomach losing their money. It's taken them 20, 30 years to build that nest egg. They want to protect that money. And for those that are being lured a different way and telling them to stay in the market and dollar cost average, you just have to have way more conviction, and you have to be able to find a way to be able to illustrate and help them move forward on something that totally benefits them. And this is why I'm diving into the details, because I want you guys to know that you know that you know that this is the absolute best thing for them. Now, am I saying don't put none of your money in the market? I'm not saying that. I think that a part of your portfolio, at least the foundation, should have total security that you know that rain or shine, you're gonna get there. My most affluent clients, they have money in the market. I myself participate in the market, but I have a percentage, and my, you know, even my clients that are affluent have a percentage of money that they could stomach, that if they lost, they're not gonna worry because they're still gonna get there with their foundation, which is these index strategies. In fact, I put a message on Facebook group with our group. One of my clients that moved over $2 million with me, he sent me a text message thanking me that he said it was probably the best investment that he's ever made was to put his money with us over with index annuities, over with NWL. That felt really good to receive that message. So it locks in your gain. So imagine every return that you, say for instance, this year you earn, say, a 5% return, you get that 5% return, it's locked in. It can never go backwards. Index crediting options, you'll have more, you know, sometimes you'll have maybe 4 or 5 different strategies. Depending on what company or what provider you go with, they'll have various different indexed options. The other thing too, with the growth opportunities, you have a guaranteed rate. You could also put some of your money into a fixed rate. I've had some of my retired clients, when the market's volatile, they're like, hey, look, when it's time to renew that index strategy, they choose whether they want to put it into fixed or diversify within a couple of different strategies. But sometimes they just sit it out and put into a fixed rate versus going through the possibility of not earning anything. Tax deferred growth. Let's just say somebody took a CD and they moved it from the bank or just cash from within the bank, and they moved it into one of these tax and index annuities. You don't have to report at the end of the year. You won't get a love letter from Uncle Sam saying, hey, you're gonna have to, you know, pay on these capital gains or report these capital gains. So your money grows tax deferred. There's income payments for life or scheduled payments. You could do a monthly, you could do a yearly, you could do a quarterly, however you choose. But once you start taking income, you could have income guaranteed for life in these types of plans. So that's what the rider's about. So let me go ahead and just break this down so you could see exactly how this works as an example. Hopefully you guys are following along. I always like to tease people and say this because I strongly believe in this. If you find this boring, I hope you I hope this bores the heck out of you, that you have to take notes, because boring makes you a lot of money. These details are the things that you need to know so that you convey confidence and conviction when you're talking to your clients. And by the way, feel confident that in the beginning, you can leverage field trainers. You could leverage a Carlo, an Isaac, a Julian, someone like myself, someone that's more senior. And in fact, even behind us, we have other senior advisors that are helping support you out in the field. So let's go ahead and dive into this detail. This example is someone who's 50 years old. Say they have $100,000 in an old 401k, and they decide to roll it into an index annuity with us. Their goal is to retire at age 65. What's the absolute worst thing that can happen? Is the market goes down, right? So they lose money, especially in a time like right now. I just shared with you the graph earlier. This is what's happening. So people right now, this is where we're at. Like, oh my gosh, what can happen right now? The market's all over the place. Look, this is a great example for you to be able to share with them. Day one, your money's protected. So even at worst case scenario, at 65, in contract, you're guaranteed you're gonna have $100,000. But here's what we're gonna add that's gonna make this even more attractive. We're gonna guarantee your future income. So regardless of what the market does, whether it stays flat or the market goes negative, the company, by adding on this rider for a small fee, which is 1% or less, depending on what company, you're gonna have, in this particular example, a 5% compounding rate of return on your future income value. I'm gonna stop for a second because this is where it could get confusing for a lot of people. And I've seen agents out in the field, not part of our company, that misrepresent or don't, just because they plain and simple don't understand this product. This is not a real return on their account value. So there's two values I want you to look at. And it's almost like there's a race. So your account value is the $100,000. That's your real money. Your income or your withdrawal benefit income rider, this value, that's for income calculation purposes. So what takes place is there's almost a race. You have your account value and your income value. At the end, when you go to retire, they're going to look to see which one's the higher of the two. In this particular example, which one's higher? Obviously the green one, because this is what you protected. If the market did horribly, at least you could count on taking income off of $207,000. You guys see that? But let's just say that the market starts to pick up and you actually averaged a 6% rate of return. That's obviously higher than the 5. So your account value, your actual real dollars outgrew, and you're at approximately about $240,000. If you were to walk away from this account, let me go back one more step. If you were to walk away from this account, are they going to give you the $100,000 or are they going to give you the 207? If you were to close it and say, I'm going to withdraw my account from here, they're going to give you the $100,000. But if you choose to take income, they're going to base the income off of this value. So it would be to your best interest to take income versus withdrawing it out. In this scenario up here, if you were to withdraw it out, the only reason I would say that you would possibly withdraw it is that in the future, what if in the future, by the time you're 65, there's a better income or you could get a possible better income in a different annuity? Then I would consider at that point rolling it over to a different annuity and then turning on the income because it's going to give me a higher income. Does that make sense? But at this point, even then, I would rather take income off of this value. So let me give you the number so you can see how that looks. So for instance, here on a guaranteed basis, and this is what I love. I could look at my clients with total peace of mind, with total conviction and confidence. I could tell them to the penny, exactly right there, right in front of them. And I'm going to share with you how to do an illustration in a minute. I could tell them to the penny what they could count on. And for the most, every single time, it doesn't fail 100% of the time. If it's good for them, they're going to move forward with you. They're like, you know what? Okay. Cause in their mind, they can start wrapping around. Okay. That means that's about 1,000 some change a month. Okay. So they start breaking it down monthly. That's worst case scenario. But the cherry on top is that, again, I want to hope for the best, but I'm planning worst case scenario here. If it does better, if it does 6% or 8%, guess what? You're going to have a higher income, which is going to be something like this. If you averaged 1% better, then you're going to get about close, 15,500 or so per year for the rest of your life. And even if the account value ever went down to 0, guess what? The company is still going to continue sending you that check for the rest of your life. This is the only place inside of an annuity where you could put your money in and it's contractually guaranteed that it's going to give you money for the rest of your life. The beautiful part about this particular strategy and why I think there's so much power in an indexed annuity is that you're not giving up control of your money. So during that withdrawal phase, God forbid something happens and you need to tap into the value, the account value, you have access to that value. I've had many, not many, but I've had cases where I've had clients had to tap into the base of it because they were going to do maybe a repair on the roof or something like that. So I'm like, well, let's call and see how much it affects, but it's going to affect your income that you're receiving annually. So I've had a couple cases where someone took out 10,000, someone took out 15,000, and their check on a monthly basis was only affected by like $20 or so. And they were okay with that because they needed to make that fix. So at that point, when you're going to do that, I would just assess with the client and walk them through. Let's just check to see if it's even worth you doing that. But if that's the last place, just, obviously you have to educate them and teach them that this is going to affect your income. Overall, the whole point I'm trying to make there is that they still could touch the money. You're not giving up control. And that is very, very important. So I'm going to stop for a second and open up to questions here because I know that I covered this pretty fast. So if somebody raises their hand or unmutes themselves, go ahead and do that now because I want to make sure that you guys are getting this concept here. This is very, very important. Literally, I know this is going to be embarrassing for me to say, but it's not even embarrassing. It took me years to really understand this because I was always getting confused with the income riders and stuff like that. So Carlo, do you have? I thought you were going to say something.
No, no, I think the visuals on this are on point. It's a very strong visual aid. So great presentation.
Awesome. Thank you. Does everybody looks good? So people are looking at it with the focus. What I could do is I could give I could give this presentation, because I think this would be a great visual for you to be able to use if you want to illustrate how an index annuity works with the income rider. So let's go ahead and move forward. Whoops, let me move this. Yes, you have a question?
Yeah, sorry.
So,
What is
Krista,
the W?
let me go back. Let me go back. Okay.
What is the WBIR stand for? What is that?
Oh, withdraw benefit income rider. So it's an income rider. So a withdraw benefit income rider.
Okay.
So it's for future calculation purposes. So it's only going to be able to calculate an income value. So for instance, if we go back here on the green where it says lifetime income, here in this example, with this particular example that I'm doing, the company will guarantee a certain percentage. So at 65 with this example, that means I'm doing NWL. At 65, you can multiply it times 5.5%. So 5.5% times 207,893, that will give you the 13,513. Not every company is like that. So that's another point that I'm going to make, or I just might as well make it now, is that when you're looking at at different annuities, you also have to look at what's the withdrawal rate on the back end. Because a lot of companies out there offer bonuses and all these nice bells and whistles, but nothing is for free. I always tell my clients, look, it could look nice on paper, but what I want is I want the most, I want the largest dollar amount going into your bank account every single month for the rest of your life, and without losing control of your money. Did that answer your question, Krista?
Yeah, thank you.
Awesome. All right, so let me go ahead and continue. All right, so what are some of the negatives? Because I know I just mentioned a lot of positives. So if I was gonna try to find some negatives here, the only negative, one of the biggest negatives, and I didn't state this on here, is that a lot of agents themselves don't fully understand them, or they misrepresent them. And I think I could see how people could get in trouble, or someone could get in the wrong annuity. The other thing too is that we're the first underwriters out in the field. So you have to be honest with the application, especially with the suitability forms. And so the suitability is there to protect the clients. So I love that. And it's also there to protect you. So be honest and write in everything correctly. If you're dishonest, guess what? It's all there on paper and it's going to come back and bite you. So we don't stand for that stuff. So we'll do more training when it comes to suitability, so you could understand the do's and don'ts, because it's very, very important to stay compliant and that you do the right thing always. But you could be guaranteed that you're gonna, even when it goes to the suitability and underwriting, they're gonna catch it unless you're unethical and you lie. So I just want to put that out there, and that's not the way we do business. So let's go ahead and move forward here. So what's one of the negatives? There's a surrender period. So what does a surrender period mean? Because in layman terms, most people are not going to understand that. What this pretty much means is that you're going to be in this program for a set number of years. An example that I could give is if you're familiar with mortgages, or if you own a home, the banks will at times will put a prepaid penalty that if you refinance or sell your home, you got to give them enough time to earn interest on the loan. So for instance, if you have a prepaid penalty for 2 years or 3 years, if you sell the home before that time period, they're going to charge you a fee. In this case, the surrender period could be 10 years, it could be 13 years. Some could be a little bit shorter, but if you withdraw all that money and move it elsewhere, there's going to be a fee depending on what year you do that. The good news is that every year, most of these annuities companies will allow you to touch 10% even during that surrender period without incurring a fee. So this is very important because the annuity that you set someone up with must meet the time horizon and liquidity goal for that particular client. That's why, again, 1 year, 3 years can make a huge difference. That's why everyone is a little bit different. Withdrawal rates are also very important, because on the back end is how much money are they going to be able to receive on the back end so they could, comfortably retire. Index crediting opportunities. That's another option to look at, is do they have the best upside potential, or are they going to be in a very horrible position where they're not really going to capture none of the upside? There are some nice product opportunities out there that give nice bonuses and they have a nice guaranteed, but they're not going to have none of the upside. So if you're only banking on the guarantees, then it could still fit and be the right thing for them, but they have to be aware that they're not going to earn much on their account value. So let me go ahead and you got to make sure that they have enough money for liquidity for in case of emergencies. I think there's perfect. There's a chat going on here. I don't know if someone had a question. What is the minimum amount to start a fixed index annuity? Great question, Susana. The minimum varies with every single company. There's some products that, for instance, I'm going to share with you right now, minimum is 30,000. Some of them with NWL, if you're just going to open up an IRA, is as little as $2,000. If you're going to do a Roth, it's as little as $5,000. Even if you're going to do a startup, say with NLG, they're going to do a Roth or IRA and they're going to do it monthly, they could put as little as $100 a month. So you could literally help someone who's just getting started or someone who's rolling over $1 million+. So some of the products will say, hey, once it gets to $2 million or $1 million, you have to call us and we got to make sure that's suitable. And if we're going to accept that type of money. So there's some cases where you'll have to put $1 million here, another $1 million in a different product with a different company. So NLG, yep, NLG is $100. I think there's another one. Oh, okay, Carla was put in there. What is a cap on the growth, for example, in NWL? It all depends on the cap, Natalie. The cap is going to vary depending on what strategy you choose. So I'm going to give you an example, and that's a perfect one that leads into this here, the index crediting. An example is, let's just say that there is no cap. So a lot of companies will say, hey, this marketing material looks awesome. Over here, your money, you have no cap. That means you could aim for the fences. And if the market is 20-something%, you could get all the upswing. Wait a minute. Well, read the fine print. But what if the participation rate is 30%? Well, what the heck does participation mean? So let's just say that you this year got a 10% return. So you now multiply 10% times 30% because you're only participating 30% of that. So that means you're only going to get 3%, for instance, or 3%, not all of it. But what if on top of that, you multiply that there's an asset fee? So now multiply the asset fee on top of that. So you got to look at those little details. Now, a lot of people won't go into that. I like to be transparent with all my clients because I don't want it to ever come back with say, hey, how come you didn't tell me this? Either way, there is so much positive that even if they were just focused on the guarantees and those benefits way outweigh anything else. Even if the returns, like I've never had a client complain like, oh my gosh, the market did say 15 this year, but I only earned 8%. Especially when they didn't have to worry at all. I've had some cases, and I could actually share with you some historicals of my own personal clients where in 1 year they earned 21%, 23%. That's pretty nuts, right? That's pretty high. And I promise you that those clients didn't call me and say, hey, how come I didn't get the 27 that the S&P earned this year? They weren't complaining about that. So I'm never selling what I guess what I want to disclose here with total honesty and transparency. Never ever sell a return because you can't predict the future. What you got to share with them are the guaranteed features, because those are the things that like I mentioned earlier, when I go back over here, let me go back to that slide. This one right here, the green one. Whoops. Right here. I love this green one right here, this green income, because this is what I could tell with total confidence. I could tell you right now, what's going to happen 10 years from now at worst case scenario. That is a lot of value there, because if you could tell someone, I promise you that the broker who's trying to sell them a mutual fund or a unit investment trust or stocks or bonds, they cannot say the word guarantee and they cannot tell them what's going to happen into the future. They could show historicals, but that doesn't mean it's going to happen into the future. This right here, rain or shine, no matter what, is worst case scenario, which is pretty powerful. So you bring a whole lot of clarity and certainty to people, which is priceless. So let me go ahead and forward this. I think we're pretty much done with this part. I wanted to give you guys a case study, and Carlo and I are going to go over it together. So before that, what type of money can participate? Because this should be on your mind. Like, oh my gosh, I know people's got money here sitting there, but what can I put into this? Any retirement account, anything that's a qualified account, that means it's pretty much tax deferred, or it's inside of a Roth or an IRA, 403B, 457, anything with the 4, pretty much any money, even money that's inside of the bank. it could all go in there, which they call those technically non-qualified money that's not inside of a retirement account. So savings accounts, CDs, they could liquidate mutual funds, they could liquidate stocks and move those monies into an annuity. So all types of money, any money can go inside of an annuity. So I'm gonna go ahead and exit this presentation mode, and we're gonna go into sharing with you some illustrations. So Carlo, can you unmute yourself and walk through together this case? Because I know that this morning we went over a particular case, and I wanted to go over it with everyone so they could see exactly the steps that we take.
I'm here.
All right. Hopefully, I guess I'm going to start from scratch because I don't want names to pop out. So the first thing, so here's the example that Carlo this morning said, hey, I'm working on this case. I just want to go over a couple of different scenarios and share a couple of different options with this particular client. The client is 60 years old, 60 years of age. He doesn't plan, right away I asked, well, when does he plan on retiring and where's the money coming from? So it's an old 401k. It's approximately $127,000 and he wants to retire by 67. So $127,000 and he wants to be able to put this money somewhere and then turn on income or start to withdraw from it at age 67. So we got 7 years to be able to do that. So the first place that I thought about, I said, well, let's look at Equitrust. Equitrust is giving a nice 10% bonus. They also have a pretty good withdrawal rate on the back end. I don't know if this is going to be the winner. I don't know if this is going to be the best one yet, but at least this is a starting point. And then we'll look at NWL. Then we're going to look at Fidelity and Guarantee. And those are the top 3 players right now. So I'm not going to dive into why those are the top 3 players at this particular moment, but what we're going to do is we're going to always do the homework and look at various companies. It's not going to only be those 3. So just to disclose that. So let's go ahead and dive into this. I'm going to go to all annuities. This is literally can you guys see what I'm sharing with you guys? Carlo, can you see this? Okay, cool. So this is the tool. This is the illustrator. So every time you get appointed with a company, I want you guys to take the time to get into their website. You could even call them. You could call someone at our office, actually, someone like myself or Julian. Julian's going to be the first point of contact that's going to walk you through and have a webinar with you and show you how to run an illustration. And if you can't get in touch with him because he's working with somebody else, you could call Equitrust directly and someone there will walk you literally step by step to show you how to navigate and use their tools and how to also order material for free. They'll send it to you so that you could use it as marketing tools to share with your clients. So I'm gonna go ahead and move forward with this particular illustration. So literally your name will appear, your information, you put that in. Next. I'm gonna go to new client. So I'm gonna say John Doe, okay? California, excuse me, Mel. And let's say the client is 60 years of age. It's always best to have their date of birth because it's gonna be the most accurate. But in this case, I'm just gonna go ahead and put 60 years of age. I'm gonna go next. So far, by the way, this is kind of embarrassing. Is this stuff hard? Like, is this kind of rocket science? Name, middle name. Like it's interesting. Like, yeah, this is pretty cool. You could get paid a ridiculous amount of money just by inputting people's information. You're helping people move from point A to point B in the most efficient way. You're saving them a ton of money and you're protecting their future when it comes to their retirement. So let's go next. So this is going to give you the different index strategies. The product that I feel is a fit for this individual because of his time horizon is the market 10 bonus with the index annuity. You could go either with the rider or without the rider. In this case, we're going to go ahead and add the rider, which is this one right here, the market 10 bonus. So these are the types of options. You could look at the historicals and what it's performed. We're going to go ahead and just take the annual point to point. So I'm going to go next. So I'm going to go ahead and just select that one. See how you can have different options like I was mentioning earlier? I'm just going to put 100% there. His initial amount is $127,000. Let me make this bigger. $127,000. It's coming from a qualified account. And now I'm going to go next. So he's going to have the income rider on. He's going to start income. I'm going to put 66 because I want it to start right at 67. So on year 7, he starts to receive income. Single, meaning it's going to be based on his life, so he could have the maximum. If he decides, hey, look, I want to base it on my spouse's life and mine, then it's going to drop it down by a percentage. But in this case, I'm going to go single. I'm going to go next. So here's the values. I'm going to go ahead and open up the report, though, because I want you guys to see it on the report. It looks a lot nicer. View the illustration. Oh, look at the historicals. It's opening up right now. You guys bear with me here. Carlo, give me a thumbs up if you can see the screen that just popped up as a pop-up.
I can't.
Okay, I'm gonna stop the share and I'm gonna reshare, but I'm gonna share just that screen that popped up. Perfect. Can you see that now?
Yeah.
Perfect. Okay, so let's walk through this illustration because I want you guys to look at this for a second as if this was your client, and really use common sense. It's something that you don't have to overanalyze. Remember, his goal is to retire at 67 and he wants to have the most income possible guaranteed for the rest of his life. And he wants to get there in the most secure way. There's no more secure way than doing it this way. In this particular one, the reason why I'm showing the bonus one is that there's people out there that might be in his ear. And so what an average Joe agent does is they're dangling the shiny object. They're like, hey, I could get you a bonus. I could get you that. And guess what happens to most people? They fall into that trap. Like, oh my gosh, I'm going to get a 10% bonus. Oh my gosh, I'm going to get a 15% bonus. But I always like to share with our clients, hey, look, there is nothing for free. If you're getting a nice bonus up front, what are you giving up on the back end? So I want to show a couple of different examples so that he can make the most educated decision. And he can see that what I'm saying is going to be there on paper, and he can see it for himself, and he can see that that it's accurate what we're sharing with them. So let's go ahead and move forward into this illustration because it's a pretty nice looking illustration. It shows exactly how it's allocated 100% in the annual point to point. I'm going to go forward or go up. This gives a summary. It has a 9-year surrender period, which is not bad. This meets for California rules where if someone age 60, they can't have no more than 10 years in surrender period. So this meets that. It goes over some of the definitions. I would suggest always to read them. Even if some stuff goes over your head, make sure that you know somewhat, or you try to study it as best as possible. So when they ask you questions, you feel more prepared. Most people, they won't, but there are going to be some cases where people want to ask you some details about it. So this gives more definitions, summary of the income riders. So now here on the guaranteed basis, here's what I want you to see on the top. So it shows the person's age. It shows here their initial investment, but it's also showing the bonus, which is pretty nice. Right off the bat, year one, this person's going to get a $7,600 bonus. And really where he's going to be looking at is this. Well, what does that really mean to me at age 67? It means you're going to start to receive $9,330 in income yearly for the rest of your life. Even if the account went, and this is on the guaranteed basis, by the way, this is just like if you didn't earn anything. Even when the money goes down to zero in this example, at age 85 in this particular case, if it didn't earn anything, he's still going to continue to get that income of $9,330 for the rest of his life. So let me share with you on the non-guaranteed. Actually, I want to move forward to something else back here on the back end. This shows some historicals. Let me move forward to the back because I want you to see the guaranteed roll-up rate. Okay, so this is where the income rider kicks in. This particular company is going to charge a 1% charge for the income rider. But look at this nice roll-up rate, 6.5%. So imagine the client's getting a 10% bonus and then is going to get a nice 6.5% roll-up. So year one, what does that really look like? 16.5% guaranteed. So I want you to record that in your mind or write that down on paper, because this is where you're going to have maybe that aha moment like, oh, wow, you know, the numbers are the numbers and they tell the truth, right? They tell this true story. So this is 9,330. I'm going to go ahead and exit out of this. I'm going to run a different example. let me stop sharing this. I'm going to go now to a different company. Whoops. I went the right, I was flipping this. Okay, I'm going to close that. I'm going to go ahead and show you now. Okay, so let's go into NWL. Carlo, do you remember in which one you were running for NWL for this particular case? So let's go to
Pro-dynamic. I did pro-dynamic.
Pro-dynamic. Okay. Oh, you're talking about F&G? No, Pro-dynamic on NWL. Never mind. So, so the thing that's interesting about the income rider calculator for NWL, they're not going to show you historicals. They're not going to show you none of that. They're just going to only show you the income rider. So all you could show is the guarantee. What NWL is doing is they want to avoid agents trying to sell returns or future returns. So they just give us a calculator and income rider benefit calculator. So I'm going to call him John Doe. And so I'm going to do the income outlook, 60 years of age, 127,000. It has no bonus, right, Carlo?
Right.
And it has 7 years. And I'm gonna go ahead and hit submit. That's how simple this is. So I'm gonna look at the values here. I just want to make sure that I hit the right year. Okay, so that means at age 67. Okay, perfect. So which one's higher, guys? Obviously, this one's higher. 10,000. And guess what? This one was rolling up. I'm gonna go ahead and do save the PDF because I want you guys to see it on the PDF. Carlo, can you see the PDF on the screen?
Yes.
Okay. So again, does this one have a bonus? No. Whoa, but what happened? The other one's giving me a 10% bonus and I'm rolling up at 6.5. This one's not giving me a bonus and it's only rolling up at 5%. What the heck? How does that work? Isn't that pretty amazing? Again, there's one other factor. What do you think it is? It's the withdrawal rate on the back end. At the end of the day, how much is the company guaranteeing you they're going to give you for the rest of your life? With this particular case, on the other one, it was 4.5. This one's giving you 5.5 at age, no, this one's giving you 5.7 at age 67. Well, the other one was only giving a 4.5% guaranteed withdrawal rate for the rest of that person's life, which is unreal. The other thing about this company too, is that let's just say you're 6, there was a major emergency and this individual decides I need to take a big chunk of my money out. That 10% withdrawal rate will keep rolling up. He could touch up to 50% of the entire value and move it elsewhere or use it for whatever he wants without incurring a surrender penalty. Now, obviously it's inside of an IRA, so he's gonna be subject to taxes. He's of age, but he's gonna have to report that as their ordinary income. That's not what we're really looking at. The main thing we're looking at is the rules of the annuity here. So this is the part that I love about knowing the details, because this will totally separate you from anyone else. And this is the kind of work that we do behind the scenes for you. So as you're learning this, you're going to get the hang of this a lot more and you're going to feel way more confident. So don't get spooked, or don't say, like if someone says, hey, well, I talked to another advisor and they're giving me a bonus. How come you're not? Well, let me share with you the specifics. I could also give you that one, but here's why. This is why we're going this route. Does anyone have questions at this point? I'm going to open it up because I'm getting too excited here. Lisa smiling. Maybe Lisa, I saw you smiling. Maybe I'm going to unmute you. You could maybe chime in. If you have questions, I'm going to unmute you, Lisa.
I think that it's interesting how you said that the comparison between the two companies from the 4.5 to the 5.5. I mean, that's a significant difference. I was doing the monthly while you were explaining it, and I'm like, it's almost $100 difference, right? And that's somebody's money for the rest of their lives. It does make a difference where you're going to roll these benefits.
And not to mention, and I'm glad you brought that up, there's another thing that I forgot to mention. So with Equitrust, they're totally focused on the guarantee, but not on the upside, because it's not going to be able to earn that much of an upside. NWL has awesome index strategies where it will potentially capture more, you'll have a more opportunity to capture some upside of whatever the S&P does. So more flexibility, more upside. But is this the case with everyone? It's case by case. In this particular one, because they have a little time horizon, I would rather go here all day with this particular one. We could also look at FNG, but for the sake of not overwhelming you guys and with the time, that was another one that I was going to look at and run it. But with FNG, it's a little bit more technical where it has to meet like a certain breaking point. And 7 years is too short. If they had at least like a 10-year horizon, it might make more sense. But again, in the time that we're in right now with all this uncertainty, it's not going to have the same guarantees as these two that I just shared. The other one's going to be banking more on a possible index that could possibly get them a better income in the future. I don't feel comfortable with that. I rather will go with the guarantee because rain or shine, like I mentioned, I could look at them with total confidence and say, hey, this is what you're going to get at worst case scenario. And that's what people want right now is they want certainty. They want to make sure that they're going to get there. Carter, do you want to add anything to what we just went over?
Yeah, I mean, at this case, so this was a client of mine that I reached out to, by the way. And the reason that the wife didn't reach out to me is because she assumed, right? Keyword assumed. She's like, I won't be able to roll over Larry's account because he's still working for the company. Mm-hmm. And so I called, I'm playing offense, guys. I'm calling all my clients as a way to just say, hey, just want to let you know that your money's protected. And she's like, oh my God, I'm glad you called because Larry's losing money in his account. I'm like, how old is Larry now? She's like, he's 60, but he's still working at the company, so he can't roll it over, can he? I'm like, not the case. He's 60 years old. If you have someone that's over 59 and a half and they're still working for the company and they have a qualified plan like a 401k, you can roll that money over without having to close the account because he's still getting matched contributions. So we're just taking the cash and we're rolling it out while still keeping the 401k open. She was blown away by that. She's like, oh my gosh, okay, then we need to do that. So that's where this $127,000 rollover came from. So call your clients, you know, and I know some of you say, well, I don't have rollover clients to call and give peace of mind to. Call them anyway and just be like, hey, FYI, I don't know if you know this about me, but I'm helping people protect their retirement. So I don't know if you're affected by this, but I'm just here as a resource for you. You know, and if they have all these questions that you can't answer, say, you know what, let me get an expert on the line to answer these questions. So we're here.
You know, it's interesting. That exact same thing happened to me yesterday, except my client who I really worked on for like 3 years, he finally was able to move some money over with me. He lost an opportunity where the rates went down. So I just want to put that out there right now. The window's getting smaller and smaller, and it's just a matter of time with all this volatility that these roll-up rates are going to get reduced. The fees might increase. The bonuses will get reduced. So a lot of these rates and features will get modified, not for the better right now, but to also protect the annuity companies because they can't offer all these huge benefits if all the rates are dropping. So make sure that you are playing offense. You're going out there aggressively talking to people so that you could lock them in on these rates. So this particular person moved finally money in January after like 3 years of working with him. Finally, he moved. And then he calls me this Sunday and he's like, hey, did you not get my message? I'm like, oh my gosh, no, I didn't. I missed it on Saturday. He says, hey, because we were texting and via text, I told him, hey, you know, you could also move, you can move the money that you have in your 401k. He's like, well, I'm getting matched. And so that's what we were connecting about. I said, you could actually move it and still maintain getting the matches without closing your account. You're just rolling over, you know, the 150,000 you'd have in that account. So same scenario as Carlo. So now I'm working with them to get those other assets moved and putting them into his annuity where he's getting all these benefits. So definitely anybody who's got an IRA, especially during this time, I know taxes seem to be moved or bumped up a little bit with all the chaos that's happening. But either way, people need to put money inside their IRAs. If people want to put money inside a Roth, you could do that. They may have accounts that are just sitting there. So this is a great way to get them into these types of strategies. Any other question? I'm looking through. That's a good participation. I'm really happy that we did this training tonight. Good stuff. So you've gotten some good value. Put a thumbs up. You've gotten some value tonight. Okay, awesome. So here's my suggestion in closing out, and I'm going to pass it over to Carlo to close out. This is a perfect opportunity right now to set up field training appointments virtually. And I'm gonna keep repeating this over and over. Why set up field training appointments? You don't have to be the expert right now. We could leverage each other. You could be the trust, and here's the way it works. It's trust and credibility. Leverage someone that's credible, that really knows their stuff, so that you could take notes and actually learn. Once you see a few, your confidence is gonna boost. You just need to see a few in the field, in this example, virtually, especially because right now people are looking for solutions, or they're totally confused and lost. They're at home, so they definitely have time to get behind a computer. And nowadays, they don't even need a computer. They have their smartphone. I see some people on here that are on their iPhones. So definitely you could see everything clearly on your iPhone. And that's the beautiful part about technology. So this is a perfect opportunity to get in front of people, at least to get this information. At worst case, if you even want to leverage the Help Me script, to say, hey, look, right now my goal is to get 10 virtual field training appointments. I'm learning how to work with our clients virtually, especially during this time. So can you help me by being one of my virtual field training appointments? So there's another great way to get out there that way. So I just wanted to plant the seed with that. Thank you guys for tuning in. We're going to continue. We're going to have another one. I'm going to have another one on it's going to be a different topic, but related to this. We're going to go into details of an IUL and how to sell life policies right now, because that's moving a lot right now. I'm going to do that one tomorrow night at 7 p.m., same channel. And I'm going to post it on Facebook just to make sure as a reminder. And then we're going to follow up and do another type of a boot camp where we're going to be going over, Carlo's going to be showing with you how to take live a fact finder during that, when you're talking with somebody virtually, and how that works, because it's been very successful for him. And that's going to be on Thursday at 12 p.m. So stay tuned within the group or the email so you can get the link. It's the same link. It's not going to be changing. But Carlo, I'm going to pass it over. Thank you for allowing me to participate on tonight's webinar. I had fun, and it looks like a lot of people were tuned in. So that makes me very happy to see that.
Great training, Dago.
Oh, Isaac. How are you?
Muy bien, aprendiendo. Learning.
Good to see you. Hey, it don't matter if you're at home. You always have your hair really done nicely. You never know who you're going to meet virtually, right?
He wakes up like that, bro. You know?
Awesome.
All right, guys. So thank you so much, brother. You know, and if you're new, like, I'm gonna need to see that 100 more times. Don't feel bad. I was the same way. It took me a while, guys, but repetition is a mother of all skill. You will hear that over and over again. They're like, oh, you start to get what roll-up rates, and we have our own lingo. You know, so we're going over a little extra because of the timing of the market right now. And I'll end with this, because some of you want to know, okay, what does that mean? What does this mean in dollars? Like, if I'm going to take this effort, what does that mean for me? And I just want you guys to know. So let me show you what a rollover like that looks like really quick, and then I'll let you guys go. So hopefully that can give you a little flavor of what this means. So this specific product pays 4.23% to the field if we're dealing with Equity Trust, right? So 127,000 times 4.23% equals 5372 that's paid out to the field. Now, when I mean to the field, that means all overrides, everything. Now, if you're a brand new associate, you're like, okay, I'm brand new, and you just did this, how would it feel to make $1,611 in a matter of 2 hours? Just helping a client. I don't think that's bad at all, guys, right? You know, if you're a 35% associate, right, that's 1880. Okay, if you are a field associate, that's 2148. So to be able to go out there, and I remember I was in the Marine Corps 15 years, and I was making this every 1st and 15th, working 60, 70 hours a week. Okay, that's a lot of hours. To be able to go do that in a couple hours is pretty phenomenal now at a 50% contract. So, and then I'll end there. 5372.10 at 50%. That's 2686. So, I mean, just not too bad, guys, to go out there and be able to do a rollover, you know. And for those of you that have a team, it's like, well, not only am I out there producing, but if you are building an agency, what is the difference between 50 and 30? That's 20%, right? So if you are training people, and courtesy, this is why some of you that are building teams, you have your teammates on here learning. Well, what's the difference between 2686 and 1611? So I'll tell you. That's a difference of $1,074, right? So if you're building and you're at 50% contract, which I believe that is what we consider marketing director, and you have an agency that you're building, you weren't even part of that sale, and you made over $1,000 in passive income. Now, I don't know about you guys, but passive income is pretty cool. So it's an incredible time to build a team. It's an incredible time to be going out there helping clients. It's an incredible time to be building your business. And there's opportunity right now. Along with chaos, we practice chaos management, but we're here to serve people. So I hope that answers some of your questions for those of you that are like, okay, what does this mean for me? Get out there, guys. I'm trying. If you don't talk to them, someone else will. You know, it might as well be you that's going to be helping them. Okay. So with that being said, I appreciate your guys' time. This video will be uploaded in our back office for future use. I'm sorry, in the YouTube channel. We have a different YouTube channel, which you should all be subscribing to, so that we have so much content there, guys, right? And I can't believe it's free. That's how content rich it is. We should be charging for that because there's so much value in there. Stay tuned. We will be doing, Dago, if you could talk about, I think we're doing a Thursday because we're home anyway. I think we're doing a little Thursday boot camp training.
Yeah, we're doing it Thursday noon. It's going to be the same link, same number, the one that you used to log on to this one. It's going to be at noon. And I'm also doing one tomorrow at 7 p.m. So if you're in the field, we're going to be recording it, but if you could participate and get on, you definitely want to get on. Right now, we're just taking advantage of this time to really just get you trained up and get you equipped as much as possible. What I would be thinking to myself if I was in your shoes right now is like, how can I, okay, I'm learning this material, but how can I speed this up? And again, it goes back to field training, because behind the scenes, we're also going to be teaching you, okay, see how I use this tool? Like, I love the way right now Carlo just illustrated easily on the computer. Wouldn't you want to know how to do that? How he just did that? He just smoothly, I mean, that took practice, but he could show you, and we're going to be sharing with you the tools, what he used. So you definitely want to get on and participate. So tomorrow, 7 p.m., and then Thursday, 12 p.m. During the day.
All right. Thank you, guys. So
Thank
with that being said, guys, have a good night. We'll see you guys soon.
Good night, everybody.
Buenas noches.
Thank you.
Peace.
Buenas noches a todos.